Well, let's move straight to the first guest we have on the show. PKH Ventures, that's a company in focus. They've come out with an IPO which opens today. They're looking to raise close to around 379 crore rupees. Mr. Praveen Kumar Agarwal, who's the chairman and managing director of PKH Ventures, joins us on the show. Hi, Mr. Agarwal. Good morning. Thanks so much for joining.
Good morning, Najil. Good morning, Najil. It's a
Well,
very, very good morning because of the markets are nice. Yeah.
Good. I think it's a good time. You're making, good entry at a good time into the market. So I wish you well
Making us- yeah.
on that front. But, a lot of investors out there, Mr. Agarwal, would like to know more about your business. Because you're in various verticals, right? You're in the hospitality space, you're doing construction, you're doing management services as well. My question to you is, what is your core competency and which segment of this business will you be stressing at in terms of growth from here on, say in the next few years? We don't want to ask you any numbers for this year since you'll be under a bit of a silent period till you list, then we'll ask you all the numbers. But tell us, what's your core competency?
Sure. See, actually, we are a hospitality company. If you from Bombay, everyone knows our first restaurant started at the Golden Chariot in the year 1993. But that, of course, was in a different company. Then we converted this in our company into a private limited company in the year 2000. And from there, our journey starts. And we have done so many famous brands of restaurants like Golden Chariot, the Balaji, and we have a few other brands which are doing very well. So we are primarily into hospitality and focused on hospitality. So there is some backward integration, forward integration. So we constructed our own hotel in the year 2014. The first hotel constructed in 2014. So that gave us a lot of experience of the construction industry, and we saw the execution problems in the high-end segment, which is a very niche segment to execute on time. So hotels requires to be implemented on time every time. So you can't be delayed, and there is a lot of shortage, and there is a lot of margin to be made there. So we slowly shifted a little bit towards constructing our own hotels. We have made 2 more hotels after that. But in between, in 2016, we got a great opportunity. We picked up a project, a government project, the first PPAC project in India, where we built the Delhi Police headquarters. It's a 10 lakh square feet project.
Mr. Agarwal, it's kind of you to run us through, the journey of the company as well, and that's nice to hear. But what is the core competency from here on? What will you be focusing on? The hospitality vertical? Do you see a bigger growth coming in construction? Have you bagged any more orders in the construction vertical, say in this year so far?
Yeah, I'll tell you. See, so now we have completed project around 536 crores. And our order book currently stands at 450 crores till the time I can speak. All other things I can't speak, about it. So we are progressing at a very rapid pace. We have backed 3 hotel projects in Madhya Pradesh. Those are very prestigious projects. One is a palace hotel we are building. We have backed it for 90 years lease. It's a 400-year-old fort near Khajuraho, just 4 kilometers from the airport. So that we are converting into a palace hotel. Another hotel we are doing in Panna Tiger Reserve. That's a jungle resort. The resort is
Mr. Agarwal, yes.
Yeah.
Right, Mr. Agarwal, we understand all the projects that you're doing, and the reason why we ask you about your core competency largely is because of this back and forth that has been happening, right? You said your core competency is when you started out as a hospitality company, thereafter you went into forward integration, some backward integration, and I see your businesses, there are so many of them, some of them seem unrelated as well. For instance, you have a non-agricultural vacant land in Thane. Secondly, you also have stake in one of the cricket teams which plays for the Mumbai Cricket League. Just wanted to understand the Namo Bandra Blasters, so to say. And on top of that, you have 38 related parties alongside the promoter group, which is looking to raise money. We just wanted to understand what exactly is going on out here, because chances are that maybe later going forward, you would merge them into your own company. You would take some funds out of this company, put them into your related party businesses. We just wanted to understand what's happening out here.
No. See, what happens nowadays, every government project that you take, government wants it to be in a separate SPV. You can't have it in the main company. And it is good. We have structured it so nicely always every vertical shows different balance sheet, different numbers. So everyone is well aware of what is happening. It doesn't cover up into the main company. So every vertical, every SPV, like for example, this MP hotels, the government wants a SPV for each hotel. It can't be for 3 hotels also same SPV. So you must understand what happens. That is a requirement, and we are very happy with the requirement because it gives a separate balance sheet. The numbers are
Right.
separate, so every
So-
performance of that, yeah.
Here's
So
where the
there's no-
concern is. Right.
Yeah.
You
Well
may be happy
declared, where
with.
organized, every vertical has a CEO, every vertical has.
Yes, Mr. Agarwal, we understand that.
Yeah.
Yes, so from a reporting standpoint, you think it is a good structure for you to have for your company and the government as well. But here's where the problem is. On a consolidated basis, you have 85 crores of receivables on your books, of which 60 crores are from your related parties itself. And here on, you are looking to raise the funds that you are from the IPO and fund working capital for your own business. So in a sense, you're raising money from the market to fund receivables or working capital of your business, which actually is, in turn, is your own business. We try to understand
no.
that. Yes,
Yeah,
just a second. And yes, please go ahead, sir.
Sorry to interrupt you.
Yeah,
I
go
wanted
ahead,
to
go ahead.
interrupt you because our order book, what we are asking for a working capital, is for a third-party order book of 450 crores. The working capital is only for that portion. It's very clear. So if you know the process of the RHP and DRHP, everything is so crystal clear. It is crystallized where we can use the money. There is a monitoring agency. So we can't use the money as we want. It's a very controlled regime. And we are always being very, very absolutely perfect on controls and regime. We are not bypassing anything. So you must understand that, first of all. It's not that we are going to bypass anything. So everything is very, very well defined, what we can use the money for and where we can use the money. There is not going to be any internal usage of funds.
Okay, all right. You've also mentioned that you could be looking at some inorganic growth from the money that you're going to raise. You've got a target in place, and will that get completed?
Yeah, so I'll tell
in
you
this
what
year?
happens. Yeah, so we are looking for some companies. So we are a specialized hospitality construction wing. So what happens, there are some specialized works like the HVAC works or the glass facade works, which we want to grow our internal capacities into. So we are looking for companies of that specific nature. If we acquire those companies will not be given to third-party vendors. That could be done by our own companies. So this type of companies we are looking to acquire. Small companies, not very big. We have kept only 40 crores for acquisition. So it's going to be third-party companies and very specialized company if we ever take. We are not identified.
What explains?
Yeah.
Right. What explains this revenue sharing with promoters that you have across all your companies? Because I look at it, and I'm paraphrasing from the crystal clear RHP itself, where you said the land on which Golden Chariot, the boutique hotel, is being developed by your own promoter. The company has entered into a revenue sharing agreement with the promoter by which 10% of the gross revenue of the hotel will be shared by a promoter on a per month basis with effect from March 1st, 2020. This is just one of them. Across all the businesses, you have revenue sharing agreements with the promoter, and this ranges between 5%, 10% to 30%. What explains this, sir?
So what happens when we are a family business? We are not planned this. That time we buy the land, and then now I can't have competing businesses within my own group. So everything has to be bought into this company. I can't have parallel hospitality running. So I am bound to provide all businesses into this company. So whatever market standard revenue share, if you take any other third party place, this is the revenue share which goes on, or more than this. So we have kept it absolutely at per minimum. It is not that we are going to take more revenue share or anything. It is absolutely as per market standards and even below that. 5%, 7%, 10% revenue share for the landowner. So there is no, this asset, company has not invested on the asset. So some portion of the revenue share goes to the landlord. That's what it is.
All right. Thanks a lot for joining in. We will, speak to you once again when the company lists with a bunch of...
Sorry. Yeah, I hope this point is well taken by you and your viewers, because this has to be understood. This is not by choice. These are all deals which have been done 10 years, 15 years back. So now there is no choice, but we can't have competing businesses. So that is why this structure has to be made. You have to understand this, please.
I speak on behalf of both of us here when we say that the market is the supreme, and eventually, the market decides what has been understood and what hasn't. We just put forth the points that we see in the research that you've provided to us with regards to your DRHP as well.
Yeah, and Mr. Agarwal, on listing, we look forward to having a more detailed chat with you. We'll try to get a few more numbers as well for the time being. We wish you all the best, and we'll hold you at your numbers as well. Look forward to speaking to you on the listing day.
We can't escape. Sure.
No, the market doesn't let anyone escape, sir. But
Of course, I know that.
but it's good to have a chat with you. But as I said, on the listing day, we'll chat with you. Time to slip into a short break. Up next, we'll be joined by Manoj Jaiswal to get a technical check on the markets.